Investors are now dumping homes all over the country, but the situation is particularly dire in Florida, where the conditions for another 2008-like crash are building rapidly. Florida ended January with 172,209 homes for sale, according to Redfin. This is the highest level of supply since Redfin records began in 2012. This represents a staggering 191% increase from the low point in February of 2022. Since then, Florida has added an average of 3,100 homes to the market each month, dramatically shifting the balance between supply and demand. This balance can be summed up with one metric: months of supply. This measure tells us how long it would take for all the homes currently on the market to sell, assuming no new listings are added based on the current pace of sales. Essentially, it combines demand and supply into a single, easy to understand number. As we've mentioned in previous videos, a normal months of supply is around 6 months. However, in the post-pandemic market, it was nearly impossible to find any metro even close to that balanced number. Most hovered between 1 and 3 months, meaning it was a strong seller's market, causing prices to go up. But what nobody is talking about is that in many Florida metros today, this figure has now surged past pre-08 levels, which means the situation on the ground has more potential to the downside than what it was in the early 2000s, right before the US went through its worst housing crash since the Great Depression. For example, the months of supply in Cape Coral is nearly 12 months, while Miami sits at 11, and both Fort Lauderdale and West Palm Beach are at 10. These are staggering figures, making Florida look like a dry forest just waiting for a spark on the brink of an imminent collapse. In one of Reventure's latest videos, he goes over exactly this, using his own data sets to prove that in many southern markets, the situation is deteriorating fast. Take a listen to his quick explanation, and then I'll explain why this could get even worse as the year goes on.
And what I think is really interesting about these reports from Zillow and Redfin and the data on Reventure app is it's becoming apparent that most of the housing market mainstream is now acknowledging that there is a housing downturn. This is the big shift that's occurred in the beginning of 2025, where more and more of these news outlets are saying, yeah, folks, home price growth is going to slow, the buyer demand is down, and I'm kind of actually wondering what's now going to happen in the housing market, that the narrative is officially shifting into negative territory. I think this is going to burst a lot of the bubbles out there in local housing markets. A lot of the sellers that think their house is worth way more than it is, they're going to be reading these reports from Zillow, Redfin, Wall Street Journal, and they're going to start to say to themselves, oh my goodness, it's a bad housing market. And one market that shifted down in a major way is Phoenix. This graph is looking at the months of supply in Maricopa County, the main area in Phoenix. We're up to 4.9 months now in Maricopa County. Prior to the pandemic, we were only at around 3.7 months. So we have a massive surge in inventory relative to sales in Phoenix, which is now starting to be a drag on home value growth. Another area where this is the case is Austin, Texas. Look at this graph, everyone. Prior to the pandemic, there was only around 2 months of supply in Austin's housing market. Now there's 6 months of supply, 130% increase, which is why prices in Austin are down by 20%. But this one might be the craziest graph of all, everyone. This is the months of supply in Broward County, Florida, which is Fort Lauderdale. We are now up to 10 months of supply on the market in Broward County. That's more than double the long-term average. During the pandemic, it was only 2 months of supply. So we literally have 400% more supply in Broward than we had at the peak of the pandemic, and we have the highest level of supply going back to the last housing crash.
So as you just heard, it's no secret that inventory, especially in places like Florida, is exploding. And as new figures come in, this is very likely to get worse. The key issue is that for inventory to stabilize or decline, sales need to pick up, and this is where the real warning sign appears. Demand simply isn't there. As months of supply increases past record levels, it's likely going to get worse this year. And we know this because people like Altos Research track weekly new contracts pending, which tells us the number of buyers each week. And if we compare that number to the already record low 2024 transaction data, we can see there is almost no improvement in demand this year thus far, and it's very unlikely to improve going forward. Take a listen to Altos Research explain this in this quick clip.
In fact, it's the demand side where we see the implications. Now, It's like not a lot more sellers, just fewer buyers. Nationally, we counted just over 60,000 newly pending home sales for single-family homes this week. That's an increase of nearly 5% for the week, which is what you'd be hoping for the housing market in the middle of February, 5% growth. The weekly sales numbers came in just a tiny fraction ahead of a year ago, and that's only the second time this year. Home sales have been running behind last year's already very low levels. It's hard to see any bullishness in the home sales data. So this chart shows the weekly newly pending sales. The purple line is basically equivalent to last year's pace. Last year was super slow for home sales, of course, so there's no signal in the weekly transaction counts that is at all picking up. The total number of single-family homes in contract is 304,000 now. That's 3% fewer homes in contract in that sales process than last year at this time. So homes spend 30 to 40 days in contract before the sale closes. So when we look at this whole set of homes in contract, these are the sales that will close in February and March. So the first quarter is already visible with even fewer sales in Q1 than in Q1 2024.
To summarize, Florida's housing markets are teetering on the edge of collapse. Inventory levels have soared well beyond what would be considered dangerous, and the latest buyer data suggests things won't improve in 2025. In fact, they're likely to get much worse. And you don't have to take my word for it. Just look at Wall Street, where some of the world's smartest investors are constantly analyzing market trends and making predictions. If we focus on Lennar Homes, the home builder I believe has the largest exposure to Florida, the warning signs become even clearer. In just the last 4 months, Lennar stock has plunged 32%. Ask yourself, why would this happen? Home prices haven't dropped nearly that much. Are investors panicking because they see something coming, or is this just a routine market correction? In my opinion, the inventory and sales data paint a clear picture. Let me know your thoughts in the comments below, and if you found this valuable, don't forget to hit that like and subscribe button.